Hi there, it's Bill with Smart Trades, and it's Wednesday, December 8th, around 11:25 a.m. And I'd like to first bring your attention to the S&P futures. This is a chart I actually posted yesterday morning for my clients, and at that time, and actually a little bit before, I had noticed that we had a contracting triangle forming that previous evening in the S&P futures, also in the Dow futures, and from there we had a five-wave structure up. Now, this type of pattern, the combination of a triangle, which tends to be a pre-termination pattern, and then five waves up out of it, tends to be a terminal pattern. In this case, I believe the pattern that we're terminating is the rally from the late November lows. And here's a little bit of a larger picture, and this is through earlier this morning, and you can see here the five-wave structure up. It's possible this is a C wave up, or it could be a 1. I'll get into that a little later, but the bottom line is that we have bearish divergences on the breadth ratios. I believe that is obviously bearish, and I think there's a good chance that we've peaked. Here's a chart from earlier this morning, and again, here's the five-wave structure down off of the highs. That's further confirmation that we may indeed have a top in. And here's an update of that chart, and so far we are finding some resistance right about at the previous fourth wave of this pattern to the downside, and that is also bearish. Now, the alternate count is that this decline is corrective. Certainly that's a possibility. Of note here is the X wave in this pattern comes in right below 1234 on the S&P cash. That would be the breaking point for my bearish count. So if we take out 1234, I'd have to reevaluate my bearish position here. Here's a little bit more of a pullback, and this is again the S&P futures, and you'll notice good volume on the downside here over the last couple of days. Not extraordinary, but decent. And again, here's that the five-wave pattern up, the pre-termination fourth wave, five waves up in 5, and then from there 1, 2, 3, 4, 5 down, and a corrective-looking rally back up, which may or may not be done yet. And here's the Dow futures on a 30-minute chart, and again, that five-wave structure to the downside, the corrective-looking rally. We've since rallied back up, so likely wave 2 is not over. But again, as long as we do not take out yesterday's highs, this count is still in force, and preferably we don't want to take out the wave 2 peak here, which is again our X wave on the corrective count. Just a close-up of the type of pattern that I'm looking for to get short on. Again, here's that fourth wave. We have the five waves up. From there we get a relatively impulsive decline, and I often tell people look to sell corrective rallies. Well, this is a very good example of that. The pattern is more corrective, shows a declining volume, declining ADX. The pattern itself is simply not going up as sharply as it came down, and then it finds resistance at the previous congestion point and then breaks through the lows. You don't really know this is a corrective decline until it breaks down. So the idea here, look for that weak rally back up, look for it to fail at a previous support or resistance area, and then put a stop under a key portion of the pattern, ideally say a B wave, and let the market fall into your stop. That way you've got momentum on your side, and then place a stop right above the top of the pattern. An aggressive trader, what he might do here is sell more than one contract on the way down, take a profit once he sees five waves on a portion, leave the initial stop back above 1234, and then look to sell again after you get a completed corrective rally of a larger scale. Now, on the longer term picture, we've got a whole, several counts that are possibly in force. And I bring your attention to this one because this is the most bearish. And the implication of this count is that we have a rather large decline, at least under S&P 1000, if indeed this count is correct. I don't necessarily favor this count, but again, it's certainly a possible count, and the implications are, as I say, quite bearish, and the risk reward here is quite good, so it is worth noting. My favorite count here is that we do have higher to go, but we're going to correct a little more first. This is a regression channel. As you can see, we wave 2 took out the bottom of the channel. I think that ideally C of wave 4 will do the same. That also allows for alternation. You've got more of a flat type correction in wave 4 as compared to the wave 2 correction. And obviously in this case we're looking lower from here as well. That in this count, you'd look at perhaps the 1150 to 1170 area as a target for this C wave. But let's take it, as always, one step at a time. And here's an alternate, more bullish count that wave 4 has already completed down around the 1170 area. And from there, we have wave 1 up. Wave 2 would likely find support around the 1200 area basis the S&P if this is the count. So that's an important area to watch. The bottom line is, though, is not so much what's going to happen next. It's I believe controlling your risk. And so a corrective rally that terminates below 1234 would give us a very nice opportunity in terms of relatively low risk. Given the potential even of a corrective decline here, the risk reward would look good. Obviously, there's a variety of scenarios aside from what I've mentioned here that which could possibly take place, but I think these are the favored scenarios, and again, the risk reward on the short side here is quite nice, assuming indeed we get a nice pattern to sell into in the hours and days ahead. Anyway, hope you're having a good one. Thank you so much for watching. Have a great week. Bye-bye.